afternoon, everyone, and welcome to Stock Market Today for Thursday, May 1st. It's Alissa Coram here, and we saw a day of solid gains fueled by Meta and Microsoft earnings reactions, but we did get a little bit of a fade off highs, even still quite a win streak now for the S&P 500. And joining me now to discuss today's action and some stocks to watch is my colleague, Ken Shreve. He's going to fill us in on what we're going to be talking about today.
Yes, indeed. Well, the Nasdaq moved strongly thanks to strong earnings reports from Meta Platforms and Microsoft. So let's take a look at Meta, which ran into a little bit of resistance. And this aerospace and defense group continues
Yeah.
to shine, and there were so many breakouts in this group today. So definitely wanted to talk about OSI Systems, OSIS, which isn't pure play aerospace and defense, but they do cater to that market. And then another company that caters to aerospace and defense with its specialty metals, name that we added to leaderboard today, Carpenter Technology, CRS.
All right, we will take a closer look at those stocks soon. But first, let's analyze the action in the major indexes. The NASDAQ today up 1.5%. Like I said, fading off of intraday highs, but still a solid gain for the day. Meanwhile, the S&P 500 up 0.6% on the day. A little bit of a fade here too. As you can see, the Dow up 0.2% by the close, and small caps with a solid gain up 1.1% headed into the final stretch of the day. So, Ken, we've just continued to see the major indexes clear hurdle after hurdle after hurdle. And today we had another one, that 50-day moving average. So, a close above that declining 50-day is encouraging. What do you make of the action?
I think I would agree that it's encouraging, and I know that Dave Chung was on the SMT video with you yesterday, and just wanted to give a shout out to the Nasdaq's performance yesterday. Had a lot of
Yeah.
reasons to go down. It did go down on some slack economic data, but pretty bullish close for the Nasdaq yesterday, and then we gap above the 50-day moving average today. So this is what happens when an index is trying to overcome overhead supply after a sharp pullback. Remember, there were a lot of people buying the Nasdaq as it was coming down, and they were sitting on losses. And now that the Nasdaq is rallying back, some people are going to try to sell just to break even on their investments. So, Nasdaq Composite coming up against the 18,000 level. That's a round number, still below the 200-day moving average. But we have seen, since the follow-through day a couple of weeks ago, I think it was April 22nd, right on
Yeah.
that day there. The price action in the market has been quite strong, and even though we came off highs a little bit today, we did add a couple more names to leaderboard, and we're you'd think that after such a big strong gain for the market, we'd be on margin and 100% invested, but we've just been kind of dipping our toe in the water. We were very lightly invested before the follow through day, and now we're up to about 60%, which is right at the high end of our band right now. So still encouraged by the way the market's acting. We've got a big jobs report, due tomorrow that may or may not be a market mover, but the market has
Mhm.
been, paying attention
Yeah.
to the jobs situation in recent months.
And more big earnings tonight that
Yeah.
could influence the tape, just like we saw Microsoft and Meta influence things today. So it seems like every hurdle that we clear, now we want that level to hold. So it's the 21-day line, the green line on the chart that we're keeping an eye on. Now the 50-day. Is it too much to ask for the Nasdaq to hold the 50-day? We'll have to see how it acts around that level. And then I think, Ken, you're absolutely right to point out those potential resistance areas above us, 18,000 and the 200-day line. And so with that exposure at 60%, I think, putting that in the context of where we're at, the positioning, of this price action here below that 200-day line. Many times in market history, we've seen that as a very powerful level of resistance where we get rejected a couple of times before finally healing after a big decline. Will that happen this time is yet to be seen, but something to think about for sure. But day by day, it seems like there have been those opportunities to incrementally add exposure.
And that's exactly right. We were probably 20% invested when the Nasdaq broke through the 16,000 level. So we've gone from 20 up to about 60% over the past couple of weeks, and just trying some stocks on for size. And no, I mentioned earlier on the show that a lot of our new leaderboard ads have made good progress from our entries. So the feedback
Yeah.
has generally been positive. It bears repeating, though. Again, when you get these violent downdrafts by the market, people lose sight of the fact that the Nasdaq just pulled in about more than 25% off its high. So there was a big shakeout, and we know that the road back can sometimes be challenging, whether it's an individual stock or an index. So the Nasdaq up sharply for 3 weeks, and another nice weekly gain. Taking shape this week. It's doing a good job so far overcoming this overhead supply, but it's not out of the woods yet. But we'll say we're encouraged. The reason we've been increasing exposures, we've generally been happy with the action in leading stocks out there. So not super aggressively invested at this point, and realizing there are still some yellow flags out there, but encouraged by the early uptrend here.
Yeah, totally agree. So, where we are now, the Nasdaq is 2% above its 10-week moving average. Let's check out the S&P 500. We're 1% above the 10-week line, and here's a little factoid from you from our Dow Jones data team. It's the largest 8-day percentage gain for the S&P 500 since Wednesday, November 11th, 2020. So I did find that to be a little interesting of a tidbit. It was also the longest winning streak since Monday, August 19th, 2024, when the market rose for 8 straight trading days. So we're seeing a lot of up days here, Ken. As we've been saying, it seems like at this point, maybe this is a time where you do start seeing some of those gains digest, a little bit of a consolidation or a pause. We'll have to see. But again, you have a lot of catalysts potentially that could really control the tape.
Yeah, 8 straight up days too. I think I counted correctly. Eight
Mhm.
straight up days for the Nasdaq. So after a move like that, it's perfectly ordinary to pause and digest gains. But as we've been talking about, the more we've seen some nice higher volume declines. I mean, volume hasn't exploded to the upside during this 8 session rally, but when you look at those blue volume bars, you have several instances where volume rose from the prior session. So we're talking about higher volume gains. There've been obviously no down days, so no distribution in the
Mhm.
S&P 500. And frankly, it's not going to be a big deal if the S&P can't hold the 50-day. Maybe it
Yeah.
undercuts it. We always want to see where that index closed, but where it's going to close. So after 8 straight up days, probably see a little bit of a pullback. I'm not going to lose a lot of sleep if we undercut the
Yeah.
50-day moving average, but I will start to get more nervous if we start to see heavy volume pick up to the downside, and we start to see these distribution days, higher volume declines. That can sometimes cause problems for a rally, but so far so good here.
Mhm. And in terms of where we're trading versus the 40-week line, which is that weekly equivalent of the 200-day, which we view as so important, we're about 2.7% below the 40-week. And then on the daily, we're trading about 2.5% below the 200-day line. So if over the next couple of weeks, we can continue to see this momentum uh, uh, take hold here, that could be an area that is in contention. So we will monitor it closely. Ken, let's get your thoughts quickly here on blue chips and small caps.
Faded just like the broad market here. Dow has not yet excuse me, has not yet reclaimed its 50-day moving average. So this has got some resistance to overcome here. So that'll be the next level for the Dow Jones, that 50-day line, and the Russell's in the same situation. Pretty clear who the leading indexes are right now: the Nasdaq and the S&P 500. Blue chips and small caps lagging a little bit. We'll see how they can handle their 50-day lines.
Okay, let's give our audience an update on gold. Some notable technical action that unfolded here today for the GLD ETF, down 2.1% on the day. And this was the first close below that 21-day line in a little while here, Ken. We did get an early April pullback as well. But this is an area of the market that has been outperforming so much, maybe got a little overheated, seems like it's due for some sort of rest here.
It does. It does look like that. You can see when it was starting to gap up after being very, very extended in price. It gapped above the 300 level, and then you had a pretty big reversal off highs in
Yeah.
extremely heavy downside volume. So that tells you that gold's probably ready to take a little breather here. That said, GLD is still on an uptrend here, a little bit below its 21-day line, but still holding comfortably above the 50-day. We did decide to take our remaining profit in AEM, Agnico Eagle Mine. Eagle Mines has been a big winner in the gold space, and this was a break of the 21-day line in with some volume. It kind of came off highs just like GLD did several days ago. So took the remaining profit here, and we may decide to revisit gold, especially if names like AEM come down and test the 50-day line and find support like they did just recently.
Okay. And in terms of the sector action, let's check out XLV Healthcare, a laggard today, down 2.7%. So not participating in the market rally today, Ken.
No, just kind of interesting. All of your 11 or so S&P 500 sectors were most of them were up today, even though the market faded late. This was the outright laggard, but you can see 7 up days in a row. Trying to consolidate a little bit. Healthcare sector is a big sector. We actually added a healthcare sector name today to leaderboard, which is showing a lot of relative strength. So healthcare could still work here, but you want to pay attention to a pretty significant laggard in the market today.
Mhm. Okay, well, let's take a look at one of the notable movers in today's session, and that is Facebook parent Meta, up 4.2% on the day. So it did close off highs, hit a little bit of resistance. In terms of the numbers here, earnings up 37%, revenue up 16%. So strong double digits, but both deceleration from the prior quarter here, Ken. I think what was the most interesting about this today, it seemed, from Meta and Microsoft, obviously want your take, is even though these Mag 7 stocks have been badly beaten down, we did get a little bit of relief here from these reports today. And not only that, what they signaled about AI spending, that seemed to boost the AI data center theme today, which had also really been sitting on the sidelines since that DeepSeek news in January. So, starting to see potentially some signs of life again in technology and artificial intelligence.
Yeah, AI investors actually just got just what they wanted to hear from not only Meta but Microsoft. Today with Meta, they're talking about actually increasing their capex spending this year for data center infrastructure spending, AI spending. Meta just launched a standalone. AI app that now has close to 1 billion monthly active users. So kind of an interesting day for Meta because the percentage gain was impressive. It did come in higher volume, but you can see the Meta gapped up to these key moving average, a 50-day moving average, the red line that is trending lower, kind of a flattening 200-day line. Tried to get close to that 600 level, and then sellers knocked the stock back below these resistance levels. So So this is the same issue that the Nasdaq is potentially facing. We just talked about the fact that it was bullish that the Nasdaq gapped above its 50-day line and held. Meta, clearly there were some sellers in the stock today, and a lot of good news in that report. But sellers knocked the stock off high, so it's not clear to me that Meta is ready to start a meaningful uptrend here. But the longer it can firm up, maybe around this 200-day moving average, and hold on to some of these gains over the past several days, it could continue higher. But it's going to need good upside volume, and it's going to need to renewed signs of accumulation by big investors out there. So a good earnings report with a lot of good news and generally a good response to earnings. But I still look at Meta as a
Yeah.
challenged stock, just like Nvidia, which is still on a downtrend, and Nvidia was tried to pop as well today. Nice bullish move above the 50-day moving average, gets turned away. So not the end of the world overall. The market rally looks pretty good here, but maybe some disappointing closes for some of these large cap tech names.
Yeah, totally agree, Ken. Okay, next on the list, let's go to OSIS. You said it, Ken, at the beginning of the show. That aerospace defense group, pretty stacked with a lot of interesting names. The group ranked number 4 out of 197. So that underscores the strength of the price performance of the group as of late. And a breakout here for OSI Systems. Shares up 9.6% on the day, a breakout on earnings and an RS line blue dot to accompany that breakout.
Yeah, very clean breakout. And again, one reason why we've been encouraged by by the recent newfound strength in the market is the number of stocks that we're seeing, breaking out of what we call bases, stocks breaking out of, these kind of sideways consolidations. So this was a stock, even though, the market gave back early gains, OSI held strong here, and closed still in that blue shaded area, still in the 5% buy zone from that 220 pivot. So you've got reasonable top line and bottom line growth at OSI Systems. They make basically electronic systems and components. They do a lot of work with homeland security, and they serve some aspects of the aerospace and defense industry as well. So I mean, the you can see the group ranks number 4 out of 197. LOAR
Mhm.
is a name that has done well on leaderboard. I mean, the strength in the group has been really broad based, and then
Yeah.
other breakouts in this group. Howmet HWM had a nice earnings breakout today. You see the top line growth slowed again, only up 6%, but a good response to earnings here. And then a lesser known name, a company named Leonardo. DRS, which is ticker symbol DRS. Yeah, Leonardo DRS, and this is another earnings breakout with. So when you see group strength, you want to see stocks moving in groups, and you're seeing a lot of that in the aerospace and defense group right now. Not so much with
Yeah.
your really liquid large cap names, but some kind of under the radar names
Mhm.
too.
Mhm. Well said. Yeah, very interesting. So that's a look at OSIS. And even though the average daily share volume around 257,000, it is $224 stock. So dollar volume seems like perhaps enough liquidity there, Ken.
Dollar volume is going to be north of looks like around 50, more north of 50 million. So it does, it is a thinly traded stock. You're
Mhm.
right to point that out. 257,000 shares a day is not a lot of daily volume, but average daily dollar volume based on that 224 price, pushes that up north of, like I said, 50 million. So a stock that's got good institutional sponsorship, and looks pretty good here.
Yeah. And let's take a look at CRS. Ken, this was added to leaderboard today, a breakout in the steel specialty alloys group, up 3.4% on the day. Now, earnings are out of the way. This was not an earnings day for the stock. The earnings were last week, and we did get a positive response there with the stock moving nicely above the 50-day line around that earnings report here. So it seems like this has some recent momentum behind it.
Yeah, the earnings breakout was last week when it initially crossed that 200 level right there. But we're still watching this name. It was a kind of a pullback to some short-term support levels. A good close for CRS yesterday, and then it started to move over like that high from last week. So it was still in range from that 198.48 pivot, but also tried to move above that again that recent high. Got pulled down with the broad market, but still a name that we felt was worth a shot here. They do specialty metals, and they're a big supplier to the aerospace and defense industry. So we're kind of latching on to that theme right now, just because we're seeing so much broad-based strength, and we'll see if this breakout can follow through, and maybe it can take out today's high tomorrow. We'll see.
Yeah. Okay, now on to the earnings news. Amazon, with its results out after the bell today, shares down 4% right now. It looks like it perhaps was the Amazon Web Services segment that missed Ken, even though it did have a strong earnings beat. Also, it looks like the outlook for income fell a bit shy here. So, your thoughts on this Amazon earnings reaction?
Yeah, it's just another challenged stock. It just has after a really sharp sell off for the market, it's trying to come back and overcome these overhead supply issues. So we'll see what the market what the open looks like tomorrow. It's obviously firmly lower in extended trading, and this Amazon Web Services. I mean, they're still really churning out solid growth, but if the market senses that growth is slowing just a little bit or decelerating, and I'm not sure that's the case specifically with Amazon here, but I know that has been an issue in the past. Sometimes
Mhm.
if web services is supposed to grow 30% and it only grows at 28%, the market freaks out. So Amazon Web Services is still showing really strong growth, but sometimes you get a little bit of a slowdown, and that spooks the market. So
Yeah, a
we'll
high
uh,
bar
we'll
there.
yeah, we'll look into the report a little more and see what the details are.
That we will. I know that our tech team is busy writing up our earnings reactions, the reaction to the reaction for
Yeah.
these big reports here, Ken. Let's quickly take a look at GoDaddy. I'm not seeing the stock moving just yet on my end, but that report is expected out after hours. Let's also take a look at Reddit. Wow, Ken, you and I were talking pre-show just how much this stock has suffered off of highs from 230 in February down to $79. What a huge decline. But this earnings reaction, maybe this is the sign of life that this stock needs, up 19%. That's the early reaction here to Reddit's earnings.
Yeah, I mean, when a growth stock like Reddit is in such a strong uptrend and it hit that high of 230, sometimes you'll see a stock that makes an explosive gain. Sometimes it'll pull back 30%, sometimes 40% off its high. But once a pullback gets to be 50% or more, and again, Reddit was pulled back 65% off its high, so that lessens its chances of being able to resume its market leadership. However, when you see the stock up 19% in after hours trading, there's obviously some good news in this earnings report. So I'm not sure that the stock is going to be buyable tomorrow, even if these gains hold. But
Yeah.
over the next couple of weeks, if Reddit can hold these big aftermarket gains, yeah, exactly, up in that area, you could see an entry. I think it's still early with Reddit, but this looks like a
Mhm.
pretty good report that deserves some attention.
Yeah, after these big explosive earnings moves, what we want to see is exactly what you're saying for that gain to hold and then a new base pattern to set up that would give us an area to trade off of. So we'll have to see if that can develop in the coming days and weeks, depending on where it closes tomorrow, because we do know that after hours action doesn't necessarily translate to the following regular session. All right, and it is exactly 4:30 Eastern. Let's see if we're seeing any movement here yet for Apple. helpful. We do know that they report usually 30 minutes after the bell, sometimes a little later. I am seeing a lot of volume here, and now it looks like the numbers are out. The initial reaction I'm seeing shares down 1 to 2% or so here, Ken, as investors are just starting to digest the results from the iPhone maker.
Yeah, another report we're going to have to check into here. But looking at the weekly chart, you can see Apple coming up into its 10-week moving average, trying to break out of a downtrend. So we'll see what the open looks like tomorrow, but under a little bit of pressure in the early going here.
Yeah. Okay. Well, that means tomorrow is going to be interesting with these earnings reactions. And like you said, Ken, we've got a jobs report as well
Jobs
to
report,
take a look
yeah,
at.
that the Fed has been paying a little closer attention to the employment picture, and we'll see if we can get some good news in the morning.
All right. Well, thank you so much, Ken. We appreciate it as always.
You bet.
And thanks everyone for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live. Investors.com/IBD Live for all the details on that. Starting 10 minutes before the opening bell, we are going to be joined by Scott Bennett of Invest with Rules. So be sure to check that out. Also, dropping tomorrow morning is our weekly earnings cheat sheet show with Alexis Garcia and Ed Carson. They're going to be previewing the big earnings reports coming up next week. I believe they're going to be talking about Palantir, which, a full disclosure, I do own, also Uber and DoorDash, among other names to watch. So be sure to check that out on our YouTube channel as well as at investors.com/videos when it drops tomorrow morning. So that's it from us for today, everyone. And we'll see you back here tomorrow to wrap up the week.